Hello, all of you. Here we begin with ICDS second class. The first 15 minutes of ICDS introduction is very, very important, wherein you can get questions from MCQs. So I'm sharing the screen. 1 second. That's what I was trying that time. And when I'm sharing the screen, check with me. ICDS is applicable only to compute business income and income from other sources. Okay. Second is ICDS is applicable only for computing the income. It has got nothing to do with your books of accounts. ICDS is applicable only if you follow mercantile system of accounting. ICDS is not applicable for the MAT because it is as per the books of accounts. ICDS is applicable for the AMT because in AMT you do add and less in the business income. Okay, right? And disclosure of ICDS is done in the return of income. So till here we have seen for the basics of ICDS, and now I'm sharing the screen from where we need to continue. Now, when I said every ICDS, what you need to know, some definitions, some treatment of the ICDS, that how will you take income, how will you take expense, what will you capitalize, disclosure. And then we are seeing the comparatives, what AS and INDAS is saying and what ICDS is saying. Let us compare them. It's not that only difference point we are saying. Sometimes even ICDS is saying the same thing, and even the INDAS is saying the same thing. Okay, right. Chalo. So this is what we have done. Any doubt in these points, then please ask, because these are very, very important points. AS1 we have done yesterday. I'm not teaching anything except for the differences that AS1 says we recognize prudence principle also along with going concern consistency. That means we provide for all the losses. Whereas ICDS says no, we don't provide for the future losses. Foreseeable losses are not provided in the ICDS. Losses should be debited in income tax only when they are actual losses. Like bad debts is allowed if it is proved under section 36, but provision for bad debt is not allowed, right? Even concept of materiality is followed in AS1. Here they don't follow concept of materiality. Okay, if this is profit on sale of furniture, if this is plant and machinery, let us write it separately here. Here we will just charge the depreciation on the whole block. Next is ICDS 2 is like your AS2 valuation of inventory. And all the points are same except with lot of highlight, and you can get this point in your business income computation also. In case of partnership firm, AOP, BOI, when it is getting dissolved, compulsory you need to value your stock at NRV. Stock ko NRV पे ही value करना पड़ेगा. Next is construction contract, percentage income you have to recognize. Escalation clause is a part of the contract income, right? Retention money also you need to consider in the contract. Suppose the contract price is 5 crore, but 0.5 crore you are going to pay baad mein, but still the contract price you will recognize 5 crore. I mean, say 0.5 crore is the retention money you are going to pay me after I complete the contract. Still, shall I take care of that in the income tax? Answer is yes. When you take percentage of income, you have to take it on the contract price, inclusive of the retention money. And in accounting standard 7 says, losses should be recognized irrespective of the stage of completion of the project. Stage of completion of the project is say 40%. Can you say, ma'am, proportionate loss we will recognize? No. Here they say losses are not allowed. Losses are not allowed unless actually incurred. Okay, right? So all this is clear. Early stage of the contract and pre-construction, ye baki points to same hai. Let us revise revenue recognition. I have put this in bold. Revenue for sales. How do you recognize? Exactly AS9 and ICDS 3 is same. Sales when risk and reward of the ownership is transferred. Services, not more than 90 days are required. Okay, right? When the rendering of service under the contract is completed or not, and all that. Interest income is recognized on the period basis. For how much time you have received the income. If it is from February to May, February and March, you put it in income now. April, May, you put it next year. Royalties, dividend, and so on. Okay? Right. So now, only thing they say that when you render the services, in case of services, the income should be recognized in 3 forms. Percentage of completion method, sometimes straight line basis method, and if the contract is only for a period of 90 days, 90 days का ही contract है, तो फिर instead of recognizing it 30 days now 60 days, you can recognize the income after completion. That's, for example, I'm teaching you this direct taxation final only for 90 days. Then I can recognize the income after completion of the course in the 90 days rather than apportioning it. Is this clear to all of you? Highlight points I am revising from my side, dear students. If you have read at home, if you have doubt anywhere, dividend, interim dividend when it is received, final dividend when it is declared. So like this you have to recognize. Till here we have done yesterday. Shall we continue and start now today's class with ICDS 5? It's not ki only ma'am 3 to 5 marks we can leave this topic. The way they ask it in business head and in compulsory question, you cannot skip. And it's easy also. Why not do it when you have to do it in Indies? ICDS 5 is for tangible fixed asset, and it is exactly same to AS10, property, plant and equipment. Not much change is there. They say that this ICDS is applicable to land, building, plant and machinery and furniture, and standby equipment, service equipments, if they are used long run. Standby equipments are like generators, lift, fire extinguishers, may not be actually used, but they are there. And spares. Spares, machinery spares, if they are small spares like nuts and bolts and all, charge it off to the P&L account. But if spares can be used in connection with tangible fixed asset and use is expected to be relegated, they should be capitalized. For example, if you have purchased a 4-wheeler tempo traveler for transport of your factory goods, is the tempo traveler your fixed asset? Yes. Will you charge depreciation on that? Yes. Now spending rupees 40,000, you have changed the tires of that tempo traveler. Is this 40,000 rupees huge expenditure? Yes. Once you change the tires, 10 years, you don't have to look back. So should you capitalize in the books? Answer is yes. So point important is spare parts. If they are small, charge it off to P&L. If they are important, capitalize and charge depreciation. Ma'am, what you are saying is exactly what we do in accounts. So ये वाला ICDS है ही बहुत easy. There's no change much. Now, what should be the cost of the fixed asset? Exactly what is taught to you in section 43.1 in business head, and on what you charge depreciation, you know. Original cost of the plant and machinery, import duties, GST, taxes, all what you have paid, and all the expenses incurred till it is put to use, ready for its intended use. Trade discounts and all will be minus. Machinery को लेके आते हैं तो installation, all expense also you take, ना. Cost of tangible fixed assets may undergo changes on or construction on account of price adjustments and other fluctuations that you will have to consider. Okay. Sometimes you receive grant related to property, so you may reduce the cost and only on the net amount depreciation will be charged. Now, administration general overhead are generally not charged to the actual cost of the asset unless they are specifically incurred. Are you getting? Administrative and general overhead, ma'am, they are charged off in the P&L. True, but sometimes these admin expenses are only related to this site or this asset then you need to capitalize, not otherwise. Self-constructed asset, whatever cost you have incurred to uske machinery ke parts and nuts, bolts, bearing, flyers and belts and iron plate and whatever equipments you have got, labor you have paid, fixing it, whatever cost you have incurred, all that you will capitalize. Okay? Non-monetary consideration. Good. When fixed asset is acquired in exchange for another asset, fair market value of the asset acquired will be taken. Here it is differing. In accounts, you have fair market value of the asset purchased and fair market value of the asset given. You know what is non-monetary consideration? I have purchased 5 lakh plant and machinery from your company. Against that, I have given you my company shares. So my plant and machinery will be recorded at cost of purchase of the plant and machinery. But ma'am, you have not paid anything. You have to give in shares. So the market value of the shares or market value of the plant and machinery, you must be selling plant and machinery to others in rupees. No, to me, you are selling it in barter system. So whichever was more evident, that was the rule in accounts. Income tax says the asset purchased in barter system exchange should be recorded at the fair value of the fixed asset so acquired. Clear? Fair value of asset is amount for which that asset should be exchanged between knowledgeable knowledgeable arm's length. Tangible fixed asset is acquired in exchange of shares and all, then fair value of the tangible asset so acquired shall be taken, not the value. Please star mark this point and pause and tell me please in the chat box if my example is clear or not. The value of asset acquired is to be recorded, not the value of the asset I have given. Now, improvement and repairs are generally charged off to P&L account unless they are major repairs where the benefit is going to be more than 1 year. An expenditure that increases the future benefit. For example, in my laptop, if I have changed some RAM, ROM, jo bhi bolte hai na, technical terms, and now the speed has increased and storage has increased, and this benefit I'm going to reap for the next 5 years. Can I capitalize that increase in RAM cost? Answer is yes. So generally improvement and repairs are charged off to P&L account unless they have got the future benefit. Cost of an addition or extension to existing tangible fixed asset which is of capital nature and which becomes an integral part of the existing tangible asset is to be added to actual cost. Any addition or extension which has separate identity and can be used after existing shall be treated separate. Ab ye kya point? If I am increasing the RAM of the laptop, then I will add that capitalize the cost in the existing laptop and charge the depreciation now onwards. Listen to my example. But along with laptop, now I have purchased a 3-in-1. You know, 3-in-1 jo aate hain, Xerox printer and scanner and all. So that whenever I need to print, laptop say print diya and I get the print. And wireless printers are coming nowadays. So now, can I use this printer other than my laptop also? Answer is yes. Through mobile phone also I can use them. Are you all with me? Then this printer cost you need to capitalize, but not with the cost of the laptop separately. Fir se padho. Cost of addition to existing asset is capital in nature and which becomes integral part of existing tangible fixed asset. Any addition which has separate identity and is capable of being used after the existing fixed asset shall be treated as separate asset. Clear to all of you? Ya to agar if you can feel it, you need to keep it separate, keep it separate. It can be used separately. If not, add it to original asset. Valuation of tangible assets in special cases. If the tangible assets is jointly owned, then proportionate depreciation will be given and so on. Excuse me. I'm feeling as if I'm teaching AS10. I know this part is literally taken from there. Now, where several assets are purchased for consolidated price. I want all of you to write here slum sale. I'll teach you section 50B, slum sale, where several assets are purchased for consolidated price. The consideration shall be apportioned to various assets on the fair basis. So suppose you have purchased my running business, my furniture, my projector, my laptop, my camera, everything, and you are paying me 50 lakhs. Now, for me, is it a sale consideration? Yes. Can I apportion 50 lakhs between the laptop and the camera and so on? Answer is yes. Different way. I need to call for the valuer. Okay? So we'll go little fast because this comparative is very clear. And if you feel you need more example, I'm giving you example. Here I gave example. Here I gave. For these tires I gave. I'm feeling examples will make you more clear for your IFRS also, your Ind-AS also, and your this also. If you feel technical language, ma'am, or clear karo, tell me. Fixed assets, land, building, plant and machinery, vehicles, सबके लिए it is applicable. ICDS is applicable for land, building, plant and machinery. That's it. I hope you remember that goodwill and all now no depreciation is charged. And royalties, dividends, and no, not dividends are taxable in other source, and royalties and all different treatment is there. Cost of fixed assets, you will take purchase price and all the cost incurred minus trade discount. Now this is same. You can write here, same definition. Standby equipment are normal practice but does not mandate. ICDS mandates capitalization of the standby equipment. Machinery and spares. It is usually chargeable to P&L account on consumption. Here also, however, if spares are used for long term, you can capitalize. Here also, if spares are used for long term, you can. Asset for non-monetary value. Here it is fair market value of the asset given or fair value, whichever is evident. Here, only actual cost of the asset recorded in our books. Whatever asset we have purchased, usi ka FMV of asset purchased, only that we will record. That's all. Asset acquired for consolidated price to be apportioned to various assets on fair basis. Here it is consolidated price shall be apportioned to various assets on the fair basis. And disclosure, gross block, net block, here what rate of depreciation you have charged. Okay? So there was, what was the point of difference over here? Only this one. If it is purchased in exchange, then here record at cost of the asset acquired, here acquired or given, whichever is more evident. Chalo. Next ICDS we are going is ICDS 6. Effect of changes in foreign exchange rates. ICDS 6. When I teach this as AS 11, no, I have included lot of flowchart. But for you all, I am not adding flowcharts and all because it's not zarat nahi hai. There I teach foreign exchange. So एक flowchart बनाऊं so it is all clear. Listen all of you now. When I talk about ICDS 6 effect of change in foreign exchanges, so many times we have foreign exchange transactions. Now, if there is a change in exchange rate and if there is gain or loss, how will you treat it? Let us see. So, treatment of transactions in foreign currency. Okay. This standard deals with treatment of the transactions in the foreign currency. What all is covered? So sometimes I need not go to foreign country, but can I have foreign transactions in the form of purchase of goods, sale of goods, borrowing of money, some forward exchange contract or purchase of asset? This is your first part. Are you getting? First of all, ICDS 6 is applicable to whom? Foreign currency transactions. Means purchasing goods or services from foreign country. Now I have to make you payment. You are my creditor. But when I purchased, it was 80 rupees dollar. Now it is 95. So what will happen of that exchange loss and gain? Second part of this foreign exchange is dealing with translating the financial statement of foreign operations. Means I want all of you to write foreign branches, which you have studied in inter branch accounting. Can I have foreign branch? Yes. Can they maintain their books of accounts? Yes. Can I ask them trial balance, give it to me in dollars, pounds, yens? I will convert it at the given rate and I will prepare a consolidated financial statement for head office and branch. Yes. That's the second part of ICDS 6. Third is treatment of foreign currency transactions in the nature of forward exchange contract. You know, futures, options, hedging, arbitrage, ये सब जो होता है ना, हाँ? This is a separate type of a derivative market. जैसे share market है. थोड़ा सा what is needed, I'll tell you. So in all these cases, how you are going to treat the exchange losses and gains, that's what we are going to study here. Let us first start with foreign currency transactions. I told you what kind of transactions you can have in foreign currency. You can buy and sell goods and services. You can take loan. You can purchase asset. Forward exchange contract means this I will tell you later. Now, how will you recognize? Initial recognition. Whenever you have foreign currency transaction, it has to be recorded in the reporting currency. What do you mean by reporting currency? Currency where head office is located. If in head office is in India, reporting currency will be rupees. If head office is in UK, London, reporting currency will be what? UK currency. So like this, whatever it is, it's like this, different currencies will be recorded. Now, when we have foreign currency transactions, initially, how do we record it? At the reporting currency, and what exchange rate we should take on the date of transaction. If I have purchased from you 18th of August 2021, $1,000 goods, what was the rate on that date? Exchange rate given by RBI. Exchange rate are given by Foreign Exchange Dealers Association and many other private agencies. But we will take RBI rate, which they will give in exam. Say 12 rupees per dollar, just an example. So like that. Average rate for a week or month approximates the actual rate at the date of transaction may be used in foreign currency occurring. But if the exchange rate fluctuates, actual rate at the date of the transaction shall be used. Is this clear to all of you? So initial recognition. Initial recognition has to be at what rate? Rate at which the foreign currency is, that transaction is entered. Sorry, 1 second. Next, conversion on the last day. Okay, now you have purchased some asset, you have purchased some goods and you recorded it on the date of the transaction. Okay, now what happened? Conversion at the last date of the previous year. At the last date of the previous year. Foreign currency is the, on the last day, how will you recognize now these foreign transactions? I will add on a table here that will also make it very clear. Now we have to first decide monetary items and non-monetary items. What are monetary items? Like your datas, creditas, you know, which gets easily converted into cash. So foreign monetary items and all should be adjusted on the closing rate. Foreign currency monetary items shall be converted into reporting currency by applying the closing rate. Closing rate apply karke, you have to check the foreign item, monetary items. And non-monetary items are assets and liabilities other than monetary items, like your fixed asset, your stock, your long-term investments, and all. Okay, so these non-monetary items should be converted by reporting currency by using exchange rate on the date of transaction. I want all of you to write no year ending adjustment. No year ending adjustment. Initial recognition. How do you recognize? On the date of the transaction, what was the rate? Okay? Now, after this, monetary items. Okay, you have to adjust. Let me give an example. I purchased on 18th June $1,000 ke goods at 12. Now at year ending, the $1,000 rate is 18. Do I need to pay you 6 rupees more? Yes. Is this 6 rupees my loss? Yes. Put it in P&L, allow it in income tax, and increase your creditors from 12 to 18. Is example clear? Now suppose I have purchased for 1,000 rupees non-monetary item. For example, plant and machinery I purchased on 18 June, 1,000 rupees. What was the day rate of currency? 12 rupees. But on 31st March, the currency rate went up to 18. Still, you keep the plant and machinery at 12 rupees only. Is this clear to all of you? Right. So I hope this part is clear. This covers your first part. What is first part? Oh, you are having foreign currency transactions. First, you record the transactions at the rate at which it is to be recorded on the day you purchase. Kya rate hai, wo rate pe record kar do. Second, at the year ending, decide, are these transactions monetary, data, creditors, cash, purchase, sale, which can be easily converted into cash? Yes. If they are non-monetary, keep it at the record date. Okay. And now one small thing not mentioned here, but important is inventory. Inventory, you need to value at cost or NRV. So NRV kaun se din ka le rahe ho? 31st March, last day. So then you have to value inventory also on the closing day rate. Clear or not? Chalo. Now we have forward exchange contract, and then we have actually related to foreign branches also. Forward exchange contract, I need to give some example. Forward exchange contract is, pehle listen carefully. Isko na thoda 2 minute leke, we will do it in notebook. And I don't know in your SFM and FR and other subjects you must be doing it, but here though I want to do it in the notebook. 1 minute. Ye dekho. Yeah, please see. I am giving you notes for forward exchange contract. You know, just I have purchased dollars. ऐसे जो futures options और रहते हैं ना. Yeah. Forward exchange contract for business. Like I have purchased a plant and machinery on EMI. I know that I have to pay EMI after 3 months, $500. Can I book $500 now? So forward exchange contract, if you are doing for business, it's a very vast topic. Forward exchange, futures, arbitration, hedging, whatever is very much relevant here, that much I'm doing. Check if this example is clear or not. And I'll give you time to write this also. Forward exchange contract for business you are doing. Okay. So now suppose on 1st of February 2022, $1,000 you have booked at the rate 80. Today's rate is 80 and for 4 months contract. So February pura, March pura, April pura, May pura, 1st June 2022, dollar rate 88. So everyone is saying कि dollar rate अभी 8 है, बाद में तो 9900 चला जाएगा. But now they are saying you can pre-book at 88. You know how we book our flight tickets, pre-book and all. Pre-book to kar lo, fir you can little prepone, postpone and all. So now $1,000 are available for 80 rupees now, but 1st June rate is 88. So I have paid on 1,000 rupees, 8 rupees as premium and pre-booked. Now this 8,000 premium, can I amortize as expense over 4 months? 4 months. Yes, ma'am. Then 2,000 into 2. 4,000 I will debit in the P&L for 21 and 22. Portion of the premium which is debited now, put it, and remaining I can debit in 22 and 23 next year. I have taken it here. I could have taken March here and April, May there and so on. This is what is forward exchange contract for business. Now you are just doing it for speculation. You don't need these dollars and all for your business purpose, but just you need it for the speculation purpose. Then $1,000 at the rate of 80 now rate, and then the dollar rate is 88. Don't recognize any loss now. Prudence principle, we are in income tax. We don't want to recognize any loss. Now, date of settlement. What is the date of settlement, dear? 1st June 2022. Profit or loss book in business income. Are you with me? On that day, if the rate is 87, 7 rupees is your income, no? Take this income next year. On that day, you said, okay, I will purchase the dollars in 88. If the rate went down to 60, still you have to purchase in 88, no? 28 rupees is the loss which you put in your business head in on the date of settlement. Abhi se kuch mat karo. Do everything profit or loss on date of settlement. Who says forward exchange contract for speculation? Forward exchange contract for business, this much. Write it down, please. 2 minutes, I'll be back. And when I read it, this example will be clear. You have any doubt, then unmute and ask, please. Or is this clear? Huh? I know we are in income tax class. I'm not teaching you accounting standards. But this part I feel, Baki, the first one was easy, no? Currency convert it and then year ending adjust it. So if they ask this in your business head adjustment, you should know. Just 2 minutes, I'll be back. Check this till then. Write it down, write it.
Parina ma'am, are you ready? First time? Manogna, are you there? Manogna? Are you writing first time?
All right. Finish writing? Give some response if the example is clear or not. I can give running notes for the whole ICDs, but अब उतना time नहीं है. And normally for the purchase transaction, what does they say? Huh? First date of transaction you recognize. And then closing rate you adjust for purchases and all. And for fixed assets, only the date of transaction. Ma'am, but you purchased the fixed assets in February, 80 rupees dollar. Now it is 88. Don't change fixed assets value at the closing rate even if they give an exam. Why? Because I am not purchasing 80 rupees fixed asset to sell in 88. I'm going to hold it. So fixed assets, long-term investments, these are non-monetary assets and they are not going to change. Okay. I hope this makes it clear, the second part. Now let us see the comparative study. And that foreign branches is already covered in your other accounts and also not given much importance here. Chalo, let us check up. Revenue or monetary items, convert it into reporting currency by applying the closing rate. Here also convert it. And exchange difference transfer to the P&L account. Here exchange difference recognized as income and expense subject to provision. So same. If I convert my trade creditors, datas and all at the closing rate, then ya to P&L debit karo, credit karo and whatever it is. Take it as your income, pay income tax, debit it as a loss and take like that. Okay? Chalo. Next is non-monetary items. reported at exchange rate on date of transactions, reported at exchange rate that existed when the value was determined. Same. Converted into reporting currency using exchange rate at the date of the transaction. यहाँ पे लिखो no year end adjustment. Even if they give an exam, fixed assets and all, no year ending adjustment. Here they have given inventory, non-monetary item, but you can add fixed assets, long-term loans. Do people take long-term loans from the foreign country? Yes. So for that also it is applicable. Next, capital monetary items relating to imported assets and domestic assets. Recognize in P&L account. Here recognize as income or expense subject to 43. So business head mein how do we treat? Exchange losses there, debited exchange gain, like that. Okay. Foreign operations, branches and all, reporting currency converted and recorded. Foreign operations of a person, branch, whatever name called and all. Integral foreign branch. Same principle as for own assets and liabilities. Exchange difference are charged off till P&L. Subject to 43A, no distinction recognized between capital and revenue. This is okay. इतने depth में पढ़ने की जरूरत नहीं है. Just exchange difference, charge it off to the P&L. Here P&L, here rule 115, but that is also same. Non-integral, whatever are the changes. Non-integral foreign operations means where books of accounts are separate. You know, they do their own business. Here, like they are very much our part. No separate books of accounts. Likh do. This all you do it in branch accounting in Inter only. But if you have missed out, no problem. When non-integral foreign exchange at the year ending, assets and liabilities and all are changed, then similar to AS 11, resulting exchange difference are to be recognized as income or expense instead of accumulation in the foreign currency translation reserve account. Okay. No distinction recognized between the capital and revenue. Here exchange difference are accumulated in the foreign currency translation and to be taken to P&L account. In short, if it is a non-integral foreign branch, exchange difference are transferred to the FCTR account, foreign currency translation reserve है. तो अगर profit है on exchange, तो add it. Loss है तो reserve minus. Can we have reserve on the debit side also? Yeah. But whereas here they are saying in income tax, no FCTR. Just put all the losses on the debit, all incomes paid tax. Now forex derivatives and all same as AS. Premium discount is amortized over the life and restate on the mark to market basis at year end, and P&L on cancellation or renewal is also recognized. This is forex derivatives for hedging purpose. Hedging purpose means for your business related needs. जो flow chart का left hand side था. Now foreign derivatives for speculative purpose. Underline the clue words as I am doing. Forward contract is restated at the year end. No amortization. No amortization. Here you are amortizing. Here no amortization. Premium discount or exchange shall be recognized at the time of settlement. Clear or not? So if you are doing for speculation, just do it at settlement. And if you are doing it for your business purpose, then as per AS, charge it off to the P&L account. Okay. ठीक है, ये सब ICDs or related points covered and not required. You can leave off. Literally cancel it. Kar do, no problem. Chalo. Next one. So what is the gist? Can we check along once again because ये थोड़ा बड़ा था. ICDs 6. Let us check again. It is divided into 3 treatment: foreign transactions, foreign operations, and foreign currency, forward exchange. So if it is transactions, record it on the date of transaction currency rate leke. Year ending mein adjust it. If it is foreign operations, okay, If it is foreign operations, then what do? If it is integral and all, then put the losses in the P&L account. And if you are purchasing the forward exchange contract for business purpose, then put it in the P&L. If you are purchasing for speculative, don't amortize, do everything. Do put the loss and all in the P&L, but on the date of the settlement. Okay, that is the gist. You remember enough. Next now, ICDS 8, government grant. Okay, in government grant, now what do you mean by government grant? Are all the government grant covered as your income in income tax? Yes, what you get in monetary terms, subsidies, grants, all. But if grant is given in the form of deduction, for 5 years tax holiday and all, then nothing you need to recognize as income. Those deductions are already covered under 80I series 35D and all. So now, government grant, how will you take it in income? They are received in the form of subsidies. Underline the clue word. Government grant are received in the form of subsidies. Cash incentives, duty drawback means refund, waiver, concessions and all. But it does not include government participation. You know, so many times PSUs and all where government is also owning this much percentage of profit and all. No, that's not a government grant. Now, whenever you receive government grant, should not be recognized unless there is a reasonable assurance that person shall comply with conditions and the grant shall be recognized. Recognition of government grant shall not be postponed beyond the actual receipt. Star mark. This is as per ICDS. Because you know what income accounts, books of accounts क्या बोलते हैं पता है आपको? What the books of accounts are saying? One second. Yeah, I was here. What the books of accounts are saying, that grant should be recognized as income only when conditions related to the grant are fulfilled. Whereas income tax says, you have received the grant, no, take it as income and pay the tax. ICDS are lopsided. They want income, they want tax. AS 12 is saying government grant is to be recognized only when condition is satisfied. ICDS is saying, Milana, take it. Treatment of government grant. Depreciable fixed asset. Grant shall be reduced from the cost of asset and then depreciation will be charged. Suppose you have purchased a plant and machinery in backward area for 10 lakhs. Plant and machinery. Grant you received 2 lakh. So only 8 lakhs is going to be depreciated. Reduce the grant from the cost. I want all of you to scribble the example. They can ask a 5 marks problem framed on all this. Next, non-depreciable asset require fulfillment of certain obligation. Grant shall be recognized as income over the period over which cost of meeting the obligation is charged. Grant is related to non-depreciable asset. Example, land. That too, for that 5 years on this land, you will do activities related to education and yoga for school children and like this. So you should recognize it over the period for which obligations are there. Future 5 years, you do this and we will give you grant. So divide the grant by 5 years and 1/5 tax it every year. Now, not directly related to asset. You know, sometimes it's like for the whole project in the cottage industry backward area, the government is giving you grant. It's not related to only asset, pure project. Not directly related to asset. You can write here, related to project. Proportionate amount shall be deducted from the actual cost of the asset or shall be reduced from the WDV to which the asset belongs. Proportionate cost. Here whole cost was deducted because it is directly related to this asset. Oh, 10 lakh machinery, no, 20% we will give you subsidy. So we directly deducted. Here proportionate amount shall be deducted. Proportionate amount shall be deducted from the actual cost of asset or shall be reduced from the WDV to which it belongs. I want to give an example here. See if I can write it here. Suppose your project is 50 crores. And in 50 crores, you have purchased a fixed asset of 10 crore. Now say government grant is received 5 crore. 5 crore for the whole project government has given you grant. In 50 crore, 10 crore asset is purchased. So in 5 crore grant, how much you will take it here? 1 crore. Are you getting? 1 crore reduced from the asset and 9 crore charge depreciation. Write down. Write down this example. Clear to all of you? 50 crore is the project and grant is not only related to fixed assets. So we can't reduce directly. But in 50 crore grant, you have purchased fixed asset, you have done other expenditures and all. You have put capital in the business. 10 crore is fixed asset. So total grant received is 5 crore in your 50 crore project. That is 10%. So in 10 crore, 10%, 1 crore, you take it here. Receivable as compensation for expenses or losses incurred in previous financial year or for the purpose of giving immediate support. You know, sometimes you receive government grant for the previous losses. Okay, there was a fire and now you have got the claim. If there was an accident, you have got it. So when there was an accident in the past, have you put it all in the P&L as loss? Yes. Recognize as income when you receive. Because this is, excuse me, related to past projects. Clear or not? In other case, grant shall be recognized as income over the period necessary to match them the related cost. In short, defer income. If I give you a general grant I want all of you to write down, grant is 10 lakhs. For 5 years, you provide midday meals to the poor children in your school and we will give you grant. You know, poor children are not having food to eat. Why they will come to school for education? So give them sambar rice. So we are giving you 10 lakhs grant, but coming 5 years, you should run the school and you should provide free meals. So can I amortize 10 lakh over 5 years, 2 lakh each year? Can I defer? 2 lakh put in P&L and remaining 8 lakh defer. Write down example. Grant is 10 lakhs for 5 years. 2 lakh put in P&L and defer how much? 8 lakhs. Clear to all of you? So once again, yeah. Once again, let us check up if the grant is related to, we are in income tax only, but the way they are giving the treatment. If grant is related to depreciable asset, reduce it. In fact, in accounts, you have a choice. You can reduce and you can defer and 2-3 options. But in income tax, if the grant is related to asset, reduce the cost of asset and depreciate the net cost only. If it is related to non-depreciable asset, defer it. If it is not directly related, take proportionate. If it is related to all past expenses, just directly put it into income. due to some COVID times or due to some accident or due to heavy rains, floods, you incurred losses, and now government is giving you 5 lakh compensation. So 5 lakh, take it as your business income. And in any other case, you can defer it. Now, refund of grant. R for refund, dear students, and R for reverse. Refund of grant is give reverse treatment. When you received the grant, what did you do? Just reverse it. Like without reading ahead, we can check the refund here only. When you received, you reduced 2 lakh from the cost of the asset, no? Now you are refunding the grant, no? Fixed asset account debit to grant. Fixed asset account debit to grant. क्या कर रहे हैं आप? Fixed assets value you are increasing and fixed assets debit to bank. You are paying off the grant back to government. Now, when you increase the cost of the fixed asset because of the refund of the grant, will you charge depreciation retrospectively or prospectively? Answer is prospectively. Now, when you receive the grant and you have charged it off over the period, then add it back again. Okay. If you have put it in income and now you have refunded, again debit it in the P&L. Now, if you have deferred, this is nice. Suppose you have deferred 8 lakhs. Next time again 2 lakh you will put. So now after 2 years, if you refund 10 lakh grant, so already 2 lakh and 2 lakh, 2 years, 4 lakh rupees you have put in the P&L account, no? Now take it in the P&L account, credit side. Are you all with me and very clear? So now after 2 years, write down, after 2 years, अब आप grant वापस दे रहे हो. How much grant you are paying back? 10 lakhs. Already in deferred grant, still how much balance is there? 2 you have put in first year, 2 you have put in second year, 6 lakhs. Deferred grant debit, 4 lakh, P&L debit, 10 lakh to bank. Clear to all of you? Write down all example of refund also. This may come as 1 or 2 adjustment in the P&L account. Refund of the government grant. Amount of refund in respect of government grant shall be applied first against unamortized deferred credit. To extend amount refund, and excess shall be charged off to P&L. That's what I told. Now, if amount is related to depreciable asset, add it to the asset and depreciate on the revised cost prospectively. Put this in block. Prospectively. Now onwards. Following disclosure should be made in respect of the government grant. Nature and extent of government grant recognized, and how you have recognized, what is the number of years you have worked out. Okay? Chalo, let us see the comparative study of the AS12 and ICDS. Government grant is recognized when there is reasonable assurance. Here recognition cannot be postponed. That same points are repeated here. Grant is in nature of promoter's contribution, that is capital. So here you are putting in capital reserve, here no treatment is given. Grants related to fixed asset reduced from the cost. Here also reduced from the cost. Relatable to non-depreciable asset. Credit to capital reserve or transfer to P&L. Here amortize. Grant other than those covered, general grant. Take as income over the period. If it is related to losses, put it in the P&L income side and so on. Okay? Right. Most important and last ICDS for today, I am taking ICDS 8, 9 and 10 and some question answers. We will take it in the next class. Okay? So last one for today. We can work out problems also for this in the next class. ICDS 8, 5 marks problems are also asked. Let us complete the explanation. ICDS 8 is related to securities, which is your AS 13, accounting for investments. Now ICDS 8 deals with securities held as stock in trade. Ma'am, but if they are held as investment, write down then. If the securities are held as investment, when they are sold, you will go to the capital gain chapter. And for capital gain, ICDs are not applicable. Clear to all of you? You know, I feel out of all the ICDs, most important for your exam is ICDs 1, disclosure of accounting policy, ICDs 2, valuation of inventories, and ICDs 8. Is this clear to all of you? ICDs 8. ये ध्यान से पढ़ने हैं आपको तीन. So now, many students are not clear if this is asked in MCQs. Ma'am, how ICDs 8 is applicable only if inventories are held as stock in trade? You know what is stock in trade? If I do purchase and sale of securities as my business, opening stock of security, purchase of security, closing stock of security, and so on. It's like my business. Huh? So then only it is applicable. If I hold securities as investment, and if I sell my investment, capital gain is the applicability chapter, section 45. And for capital gain, ICDs are not applicable. Okay. Now, however, this ICDs does not apply for interest and dividend. Already that ICDs 3 is covering up AS 9. Securities held for person engaged in insurance and banking, because banking and insurance are covered. I want all of you to write covered by Banking Act. These are covered by IRDA Act, insurance regulation. So they don't follow ICDs. Okay? Right. Now, how do you recognize investment purchase? Securities are recorded at purchase price plus acquisition charges. When you purchase investment, if you have done investment chapter in Inter, you purchase, and while purchasing, you pay brokerage, you pay stamp duty, other expenses, all are added. When a security is acquired in exchange for other security, then fair market value of the asset. Ma'am, this is the same you taught in ICDs that related to AS10 also. Yes. If I have purchased securities of your company, against that I have given my debenture, I will record it at the purchase value, fair value. When unpaid interest has accrued before the acquisition of interest bearing security, oh, cum interest and ex interest concept. I can teach this for half an hour. You can check one small 10 minutes video I have made on cum interest and tax interest in the accounts playlist. That will be helpful. Where unpaid interest has accrued before the acquisition of interest and is included in the price, the subsequent receipt of interest is allocated between pre-acquisition and post, and pre-acquisition portion is deducted from actual cost. This I need to explain with an example because this will affect your business income. So just 2 minutes. Yes. ICDS 8 है ना. चलो, तो ICDS 8 हम क्या बात कर रहे थे, किससे रिलेटेड बात कर रहे हैं हम? Yeah, suppose debenture interest is received in December and June. Okay, I purchased 1,000 debentures at the rate of 10 each on 1st May 2021. I have purchased. And debentures, the rate of interest rate is say 5%. हाँ, एक example लेते हैं, जल्दी से करेंगे इसको. So now 5, when I purchased on 1st May, okay, 10,000 debentures. I am going to receive the interest on 30 June, and whoever is the holder, they receive the interest for 6 months. So on 10,000 into 5% into 6 by 12, this much interest I will receive. 10,000 into 5% into 6 by 12. 250 rupees interest I am going to receive on 30 June. But genuinely, I holded it from 1st of May, no? So what is my income here? If this is 1st of May, then what is my income? Only 2 months interest. So can I say in this interest, 250, how much is pre-construction kahan aa gaya, house property? Pre-acquisition interest, 4 months. Post-acquisition interest, 2 months. Now pre-acquisition interest, 250 into 4 by 6, some rupees 167, and 250 into 2 by 6, some 83 interest. This is my interest for 2 months. This should go in my P&L account, debenture interest. P&L account or income from other sources, wherever I am. नहीं, P&L में ही जाएगा ना, because I am purchasing this as stock in trade. So related to stock, if you get income, P&L में. This is pre-acquisition interest. Is this my interest? No. When I purchase from you, dear students, if I have paid you 10,000, I must have paid you extra 4 months interest. You will say, listen, till 1st May I am the holder. Pay me my 4 months interest. Later you will get 6 months. आप adjust करते रहना. Yes or no? So already from the cost of purchase, pre-acquisition interest is deducted. 10,000 minus 167 and 9833 is the purchases taken in the trading account. Are you all getting? All this we are doing in P&L account because securities are held as stock in trade. So pre-acquisition interest is always credited from the cost, and net cost is only debited in the trading account as purchases. Post-acquisition interest, put it in the P&L account. I want all of you to take down this example so that this part is clear. Even if I have time, I don't want to take 2 more years because these are like heavy dose. Pehle itna to padho. Heavy dose means don't try to read everything. Now I've told you how to read the gist, no? That much you read and it is enough. Any doubt in the example, then please ask, or anywhere if calculation is not clear, then also please ask. Done? Finished writing? Just some figures, don't bother, no calculation. Pay attention on the concept, rate, 10 months and all, anything they can give. Chalo. Let us complete the remaining part of this. So once again read. When unpaid interest has accrued before acquisition and is included, subsequent receipt of the interest is allocated between pre and post. Pre-acquisition is deducted from the actual cost. Subsequent measurement of the securities. At the end of the previous year, securities are held as stock in trade shall be valued at actual cost or NRV, whichever is lower. So actual cost or NRV should be done category wise and not security wise. On this, write down here 5 marks question. Question, we will take it in the next class. It will take time. I want to solve it in notebook. Already 5 marks, one question. But right now you remember, ma'am, you said cost or NRV, not of each share. Z company share, cost or NRV. A company share. ऐसे नहीं, whole category. All the shares at cost, all the shares at NRV, whichever is lower. Like this, they are asking you to recognize. In this, you end up paying more income and more tax. Securities which are okay. Some disturbance. Now let us continue. So what I was saying, that cost or NRV you have to take category wise. Okay, right? Now let us do the comparative study of this. Acha, this was for securities listed, so it is easy. Securities not listed, okay, on a recognized stock exchange, but listed but not quoted, shall be valued at actual cost initially recognized. See, every time I'm saying cost or NRV, whichever is lower. But sometimes either the securities are not listed, or if they are listed, utna trading hi nahi hai that you have some different NRVs and all. Then better take it at its actual cost. Okay, right? So these 2 points are good. Chalo, let us do the comparatives now for AS13 and ICDS. It is applicable for all investments. And it is applicable mainly for current investments. Here it is only for the stock in date. Securities acquired against non-monetary consideration. Here fair market value of the securities purchased or given, whichever is evident. In ICDS we take fair market value of the securities purchased. Okay? Cost of what you have acquired. Year end, cost or NRV, whichever is lower, individual investment basis or category, kuch bhi lo. Here, security should be valued at cost or NRV, whichever is lower, category wise. Securities are classified under shares, debt. So for shares, I will explain this point by working out the problem. This I don't want you all to read. Ye mat padho. Opening and all that. Unnecessarily, you will get confused. Unlisted shares, just take the actual cost because there is no change. And cost which cannot be ascertained by specific method should be taken FIFO. All of you know in business head, in capital gain, in ESOPs, everywhere I say that for share market, in income tax, we follow only FIFO method. Though you all like weighted average or LIFO or all, you just follow the FIFO method. Okay. So that's all for today's class. The class will start, the last class for ICDS will be our next class, wherein we will work out problems on ICDS 8, and then ICDS 9 and 10 I will take up, and other problems also. Dear students, tomorrow being holiday Sunday, can I request all of you to please read these question and answers? God knows where they can ask you all this. Are ICDS applicable to 44 AD and all? Answer is yes. If there is a conflict, gist of it is given ahead. But still, these are nice questions. If they ask, we should know. In fact, I'll tell you, these questions are like highlights of all your 10 ICDS. Once we complete the ICDS, this was just to break the monotony. Then we are starting with a major and most important topic, that is math. So if time permits in the next class, if not, we will continue. Okay. So read, write all examples, watch the video again. Some of you have missed in between. Again, you rejoin. Maybe always when students do this, no, I never scold. Ye kya hai class mein aa rahe ja rahe. I feel it's very genuine reason. That's why you're missing. Because the commitment and the beautiful part of the commitment scene is whenever you join back again. So you are committed to learn, and that's what motivates me also to give my best. Okay, right. Thank you so much. That's all for today. Start preparing from your scanners. Material and all I have taken care, don't worry. But scanners and related to ICDS, some back questions are there in your material, MCQs and all. So just start reading, no, whatever topics are over. Just as a overall revise karte rehna. Sometimes just spare 15 minutes and whole assessment procedure at a glance. Sometimes just 15 minutes spare and return of income 139.35. Like this mental revision you need to do so that you recollect, perform super well in 3 hours of exam and score super well marks. Okay? All the best to all of you. Thank you and bye-bye. Yes, yes, sure, Sai Rani. Say what you want to say. Bolo. 1 second.